Hello and welcome to today's Dalal Street Week Ahead video. Now in today's Dalal Street Week Ahead video, we'll be taking a look at the news that will be affecting our markets this week. Plus, we'll take a look at Reliance, HDFC Bank and gold. For each of these, I'll share my trading plan and the key levels which I believe are important. So do watch until the end so as to get a clearer view. Also, before we go into the video, do not forget to hit the subscribe button and click the notification bell to be notified, as there'll be some live videos coming up in the coming days, so you don't want to miss those when they do appear. Now, coming to the news front. Now, on the news front, firstly, our trading week this week is truncated, as Monday is a trading holiday and Friday is a trading holiday. So that makes only 3 trading sessions, which will not affect equity traders that much, but will severely affect F&O traders. So whether you're trading the Nifty expiry or the bank or the Sensex expiry, or you're trading any stock options, do expect that decay will be faster this week, as the week is shorter, so that much of a lag has to be accounted for. So expect trading to be a bit harder in terms of decay. So if you're someone who, let's say, trades out of the money, for example, Reliance, if it's trading at 1 to 20 and you usually trade a 1,300 call or 1,100 put, the chances of you making money are going to be way lower because of the decay factor of this week. I know it's not yet the end of the month, but this week being shorter will affect it. So whichever options you're trading, you better go closer in the money or completely in the money to avoid that decay factor hitting you. It will be more expensive naturally, but it is basically the game. So that is the first thing which will affect us this week. Second is the tariff game which is playing out will continue having an effect. This is as, let's say, over the long weekend, Trump said that conductor chips, phones and certain things are exempt from those heavy tariffs. However, China has come out and said that they don't want an exemption, they want an outright cancellation. So this is going to be a fight that is going to take much longer, and every day the storyline is going to change. From this week, I'll again start entering positional option sells, as I think majority of the noise is out. There will be noise still, but it will not cause those fluctuations of, let's say, 10% or 5% in stocks and indexes. So that high level of trouble will reduce. So I think option sells can be re-entered by me and my clients this coming week. Then also this week, everybody will be taking a look at the China's GDP numbers are coming out. Also, the European Central Bank has its interest rate decision on Thursday. So that will affect, and our inflation numbers are coming out tomorrow on 15th April. So these factors are going to play a big role into what will be happening in the coming trading sessions. So do keep an eye on them. Well, now we'll move on to the stocks which we are going to cover. First is going to be Reliance, then HDFC Bank, then gold. Now coming to Reliance, now according to me, how it is trading, as long as it is between 1190 and this zone, this is a box range where we're going to get dead cat bounces, and we are also going to get the reactions of Trump. So let's say improvement will go up, decrease will go down towards it. So within this range, expect dual moves. So how I will trade Reliance, for example, I'm only going to keep it on an intraday time frame. I will basically not try to carry a position overnight. So if it breaks the high of the prior trading session, then I'll be trading it for an upside target of 1280 and 1265. On the other hand, if by chance it breaks 1190 at any point, then it's a short to 1160, and then it breaks that, then 1100. On the other hand, if it breaks this, it goes to 1340. Now, due to what it is, what if you're an equity trader? Now, if you're an equity trader, yes, you can enter Reliance at, let's say, 1218 and aim for 1280, and if you breaks that to 1340. However, the issue is going to be the risk factor right now is through the roof. But yes, Reliance is a better stock to trade as equity than trading, let's say, a small cap or mid cap right now, as their movements are going to be very severe. So you want to try to avoid that. So that's how I'm looking at the picture. It is basically a no man's land, and even if we were to reach 1340, there is not much in the bigger picture which will take it anywhere further. So that's my trading plan for Reliance. And now let's move to HDFC Bank. Now, HDFC Bank has a much clearer trading plan than Reliance simply due to the fact of where it is. HDFC Bank has done pretty well if you look at it. In this whole markup which has been happening, its range has not been that severe. It has still managed to stay above its key moving averages and everything is going well. So how I take a look at HDFC Bank, the main hurdle for it is the resistance between 1830 and 1845. This is a quant resistance level, plus it's also a simple candle resistance level. We can see a rejection, multiple rejections across this point. So how I'm going to look at it, as long as it's trading within the body of this price bar of Friday, basically don't expect much to happen. If it breaks the price bar's body, then it's a quick long to 1845. If it breaks the bottom of the body, it's a quick short to 1740. On the other hand, if by chance it manages to break 1845, then it's a clear long to 1900 and 1920. Now again, HDFC Bank is a similar situation as what is in Reliance. There is no clear trading pattern due to the Trump's tariffs and everything. But I think if you're an equity trader, if it breaks 1806, then you can buy for 1845. It's a very low reward or very high risk. But if you're desperate to trade, then you can take it. But I believe this is better for someone like an option trader with intraday. If it breaks that, you take a long intraday long to 1845 and close the long once it reaches there. In the next trading session, you take a look at it afresh. But what if you're an option seller? If you're an option seller, then I would actually suggest selling calls above 1900 and puts below 1740. Now that is completely OTMs. But you cannot sell calls above this point, is how close it is with the current price movement and current news cycle. This can break very easily. So selling calls above this is safe, because even if it rises towards it, most likely it will end up getting rejected and going down. And at that same time, this P cells will end up making money. So that's my trading plan for HDFC Bank. Now, no trading plan of Reliance or HDFC is clear, but that is how the market is right now, and you cannot do much about it. Next, we'll be taking a look at gold. Now, for gold, I've taken a look at it in a different manner. I've not looked at the one which we're trading on MCX. I've looked at the international one in US dollars. This is, I wanted to cover gold while it is live. If I do cover the MCX one, then it will be basically come into effect tomorrow morning, and you'll end up missing the whole picture. So that is why I've gone and covered the international one. Now, to explain gold in a better point of view is basically, number one, it is trading within a box range between 23263 and 3190. Once it pops above or below this, that is only when you're going to get a clear trending move. And that can be better illustrated if we, let's say, drop to the 1 hour chart of gold. Right? If you drop to the 1 hour chart, you'll see that it is basically at the top end of the box range, and it is right now approaching the zero line on the trend catcher. So now it will depend whether it ends up bouncing here. If it ends up bouncing at this point, then you're going to clear this resistance level and go have a target of 3320. And if it breaks that, 3380, but that is more of a positional target. So how I'm looking at it, as I said, if it breaks 3260, then it's going up to 3320. On the other end, if it breaks this intraday support, then it will go down to 3190, which is a major support. If it breaks 3190, then it's a short to 3120. But as of now, where gold is in the charts is basically neither here, neither there. And due to that, it is something that you have to trade with a pinch of salt. Now, I basically was looking at commodities even for our local market MCX, and I saw there's gold and gold M, gold mini. So do take a look at them, as I think if you're trading FNO, this is going to be an easier thing to trade right now than trading the indexes. It's going to give you cleaner moves, And that is why I decided to cover it today. And I will cover it more often. As I had said that there's some days will be some live videos will be coming up, and they'll be coming up on things like this. And so I think if you're trading FNO, the data, do take a look at gold, as I think it is coming a better alternative to trade right now than our indexes and stocks, as they're not giving you an opportunity, whether you're FNO trader or equity trader, post intraday. They're only giving intraday opportunity, no more a positional opportunity. So that's it for today's pre-market video. If you liked it, then hit that like button, subscribe to the channel, and click the notification bell